Funding for Market Journal is provided by the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Roy Smith looks at seasonal price patterns in corn and soybean markets. Dennis Conley explains how crude oil stocks are impacting gasoline prices. Charles Shapiro talks about nutrient input decisions. And Jerry Volesky explains how you can use an annual forage system on your operation. Roy Smith is our corn and soybean market analyst this week. The Federal Reserve announced Wednesday it wouldn't yet be altering interest rates. We discussed the potential impact of interest rates and the strength of the dollar on exports in last week's marketing segment. U.S. soybean exports from October through January were 9% lower than the previous year. China has been the destination for 69% of those beans. Corn exports during the same time frame were down more than 22%. Mexico has been the top buyer, bringing in 39% of those shipments. Corn and soybean prices have recently seen a bit of a rally. We started by asking about that when we talked with Roy Wednesday afternoon.
The market's doing what it's supposed to do this time of year. You know, the last time you were out here, I said there's a rule, never sell soybeans in February. Well, 1st of March, the market started trending up a little bit, and the early part of this week, we got a pretty nice bounce until Thursday, and then I'm not sure where we're going to go from there. We had the market sell off just a little bit, not very much, but seasonal price trend charts would say we probably got another week and hopefully 3 or 4 weeks of better prices in the soybean market.
So has Soy Roy rewarded the market yet?
Actually, myself, no, because I don't have very many beans left. I got just enough beans left, sort of my gambling stock. But yes, I do have corn left, and we moved the corn out of the bins and got it in position to sell it, hoping that this rally that normally lasts at least 2 weeks will last 3 weeks, and we'll get a chance to make some sales at some higher levels.
You were at Commodity Classic in New Orleans recently. What do you think the mood was down there?
The mood is a little rough, as you can imagine. Everybody is real happy. There were 9,000 farmers at the meeting, so we had a lot of opportunity to visit with people from other parts of the country. And you know, to me, it was kind of strange because there are some market analysts, some experts, so to speak, and they're kind of warning the farmers, well, you know, don't get in too big of a hurry to sell out, because if this El Nino turns out to be a real weather event, why, we've got some better prices ahead. But also be aware that we've got a tremendous supply of soybeans and corn available, and it might not take very much to get a little bit of a rally and then see it fizzle out later on.
Do you think that's possible, that the rally would fizzle quickly?
Well, at this stage of the game, yeah, I think that if you're counting on a huge rally, you're probably going to be disappointed. If you're talking about some minor ups and downs and maybe being able to pick some sales points, I think, you know, we'll get a chance. You don't hang your hat too high, I guess, would be my recommendation.
In one of your recent articles for agriculture.com, you talked about always forward contracting corn on May 1st. Tell me why that's been a profitable principle.
Right. And, well, one of the things that I bring out to people with these always never strategies is that they will occasionally fail. Chances of that strategy working are about 8 out of 10, but there's about 2 out of 10 probability that it will fail. Having said that, I say that the odds are so good that it's worth just saying, I'm going to sell some corn on the 1st of May no matter what. And chances are about 8 out of 10, 4 out of 5, that that's going to be a good decision. Let's face it, we raise that corn and soybeans to sell. And if you need something to say it's time to sell, that's one of the things that I say, you better not let this go by and not do nothing.
How has basis moved over the last few weeks?
Basis moved very little. We went from January futures to March futures. We got a little bit of a shift, I guess would be the way I put it, but we really didn't get much improvement in basis, and that's pretty disappointing. But I think what is causing that, or what has caused it, is the last 2 weeks there's been a lot of corn moved in the country, and I don't know if it's all sold or some of it's put on delayed pricing or what, but when you get a massive movement of grain, then that kind of kills the basis, and the basis hasn't gotten any worse, it just hasn't gotten any better.
Do you fear that there's still a lot of grain left out there?
Oh, absolutely. I don't think there's any doubt about it. The procrastinators are probably going to get punished this time because, like I said before, we raise the grain to sell. It's only March, but it's time to be making your plans. What are you going to do? What strategy are you going to use? I have a theory, I call it agricultural acupuncture. That's getting stuck with last year's crop. If it comes around to the 1st of July and you haven't sold something yet, you need to sell it then. If it comes around to the 1st of August and you still haven't sold it, you should have, and I can't help you much get out of this hole. So it's something, a psychological move that everybody's affected by it. You need to learn how to deal with it, and don't be holding that crop when you need the bins for the next year's crop.
Historically, those 2 reports that we'll see later on this month, prospective plantings and grain stocks, are they 2 things that would affect the market or change prices dramatically?
Well, chances are they could change dramatically. I really don't think they will, but let's face it, that corn is out there, those beans are out there, and they will get sold sometime. Notwithstanding what one of the people I did a marketing workshop with last week said that you may be holding on to that stuff when you need the room for next year's crop, and that's not a good situation.
Next week, North Dakota State Extension economist Frayne Olson will join us to analyze grain markets ahead of the USDA's March 31st reports. The average price of regular gasoline in the U.S. climbed this week to $1.96 per gallon. The cost is 12 cents higher than a week ago, but still 49 cents cheaper than this time in 2015. While it fell in each of the first 7 weeks of 2016, the average price has now risen for the past 4. And after dipping below $30 a barrel earlier this year, West Texas Intermediate crude futures at the end of Wednesday were sitting above 38. On Tuesday, we talked with University of Nebraska-Lincoln Ag Economics Emeritus Professor Dennis Conley to learn how crude oil supplies have impacted gasoline prices.
We remember back 3, 4, 5 years ago, go back 2011, 12, 13, we were paying for retail gasoline, we were paying about $3.50 a gallon, plus or minus 30 cents during the year. And that was pretty much the normal back then, but things have happened since then.
What has happened? How have crude oil supplies changed?
I think most of the people have heard about North Dakota and the big oil boom in North Dakota and other parts of the U.S. as well. The fracking, the horizontal drilling, increasing the crude oil supplies. And it takes a while for those things then to come onto the market and distribution. So by 2014 and 15, the crude oil supplies in the U.S. rose very dramatically. And really we got some from the world market as well.
Did gasoline stocks track along with that?
Gasoline supply and stocks went right along with that. just as you would expect. And so as we look at those gasoline supply relative to their stocks in 2014 and 15, those dramatically went up as well. So we're getting more supply into the U.S. market for gasoline.
Before we talk about the implication of just that on price alone, tell me about the U.S. driver. Is the U.S. driver driving as much, and what kind of vehicle are they doing it in?
Yeah, good question. When we look at the Energy Information Administration, the data that they keep on this, they're showing that Americans, U.S. drivers, are doing about 1,000 miles less per year. The average that they had was like 12,000, now it's like 11,000. And the other thing that's happening, which I think most people can understand, the fleet of vehicles are more fuel efficient these days as well. So there's less consumption going on in addition to the increased supply of gasoline.
Which leads to what for gasoline prices?
Which leads to what we've seen now in 2014 and 15, and really the last couple of months here. The price of gasoline has gone from that $3.50 a gallon down to a little bit above $2 a gallon. And of course, the big event that everybody was watching for this year was, is it going to go below $2 a gallon? Which it did in the last month or two.
Now tell me about the moneymaker. What's the future for gasoline prices?
One of the things is, the effect on for commodities, the way to solve low prices is low prices. Whether you're talking about corn or gasoline or whatever. So we've had for 2 years now this increased supply of crude oil, the increased supply of gasoline. That's driven the prices down. And in the U.S., now the production of crude oil has declined very dramatically in the last year. The number of rigs that are in production of crude oil is at a record low number now. And so the U.S. supply of crude oil and gasoline is starting to go down.
And you expect prices to respond how?
We expect prices then to go back up a little bit, and we've actually seen some of that, in recent weeks. I mean, we saw gasoline below $2 a gallon, and now today, we're talking about $2 a gallon. It's gone up 30 or 40 cents a gallon in the last couple of weeks. Refineries are down because they are converting from heating oil to gasoline for the summer driving season. And it's that summer driving season, school's out, people on vacation, they increase the driving. And so the demand goes up, the consumption goes up. And what we would expect to see then on prices is probably somewhere around $2.10 a gallon, plus or minus 30 cents a gallon. Again, that's a crystal ball projection, but that's certainly better than $3.50 a gallon.
We'll have more with Dennis in a future episode of Market Journal when we discuss the outlook for crude oil supplies. It appears ag land values in Nebraska will fall again in 2016. That's the indication from UNL's Ag Economics Department's preliminary farm real estate report released last week. We asked Jim Jansen, a Nebraska Extension educator and one of the study's authors, to give an overview of the survey's highlights.
With the Nebraska Farm Real Estate Report preliminary estimates from February 1st, 2015 compared to February 1st, 2016, the average value of agricultural ground in Nebraska declined for the second year in a row about 4%. Average rate was about $3,135 per acre. Rental rates across the state fairly stable, but we also seen a slight decline there as well in the 5 to 10% range. And cow-calf pair rates as well as grazing land rates for ground in the state of Nebraska also seen a rate of decline a little bit closer to 10%. And survey respondents indicated that this year with the rental rates, it's always a contentious situation trying to find a rate that's going to work out for both parties involved in the transaction.
Final results from the Nebraska Farm Real Estate Market Survey will be available in June. You can find the preliminary report online at agecon.unl.edu/real estate. Even with higher production in 2016, the USDA believes cash receipts from corn this year will fall more than $800 million. Cash income from corn sales has dropped dramatically over the past few years, with 2016's forecast expected to be about 36% lower than the record high farmers set in 2012. With that in mind, some growers may be weighing the potential return of certain inputs. Earlier this week, we talked with Nebraska Extension's Charles Shapiro on Nebraska Innovation Campus to discuss what producers should think about when deciding on the use of nutrients this growing season.
Well, the ones that they can control are the most important ones that they need to deal with this year. And with low crop prices, corn specifically, and me being a soil specialist, I'm going to talk about fertilizer prices and making those decisions.
Is there something specific that goes into weighing the costs of the potential returns that you might get from these?
Well, we have to know who owns the land and what kind of long-term interest you have in the land. So for some of the nutrients that may stick around more than 1 or 2 years, then you might not want to be fertilizing for the next renter 2 or 3 years down the road. That would be most likely your phosphorus decision or liming, whereas you want to keep getting high yields. So you have to balance the short-term yields with the long-term investment.
Let's talk about some nutrients specifically. Let's start with nitrogen. If your costs are going to be tight this year, or if your profits are going to be really tight this year, what comes into play when you think about using nitrogen?
Well, the one thing that people always mention when they talk about nitrogen is the insurance costs. They say, I know the university recommends X, but I'm going to go X plus 25. And then maybe your agronomist gives you the X plus 25, and then you're the farmer and says, well, the agronomist says 175, I'm going to add another 25. So you don't want to be doubly insured. We have a very good extension circular on corn fertility issues. Use our recommendation as a base. It takes into account a lot of credits that people don't usually always take into account, like the soybean credit, manure, irrigation water, all those things that we talk about many times over the last 30 years. Now's the time to put it to action.
What are the situations where you might be more apt to lose nitrogen?
We don't want to lose nitrogen, and the way to avoid that is to have split applications. So if it's possible, you'd put a little bit on early, and then you would go through either the pivot or side dress. What we don't like to see in no-till is nitrogen sitting on the surface. So if we get a ½ of rain shortly after that, there are inhibitors that help with that. So if you want to keep your nitrogen costs down, we have to think about split applications.
What about phosphorus as you start to think about this year, Charles?
Phosphorus is a really good example of a nutrient that can be there this year, could be there next year, 2 or 3 years down the road. So it's one of the ones where we could postpone and maybe put 2 years on at once. Right now, since corn is kind of cheap, you may not want to put on phosphorus this year, but you have to go and have a soil test, and you have to know what your soil levels are. If they're low, you need to put on phosphorus. But if you built up above our critical level, which is in the NIB guides, then you probably could skip a year, because it doesn't go from very, very high to very low in 1 year. It's a very slow, gentle decline. And once you're above the critical level, you're not going to be losing very much yield.
You had also mentioned lime. What are the pH levels where you would kind of want to see it in?
Okay, there's maybe a little bit of variation in the state, because part of our state has high pH soils below. But if your soils are below 5.3 for corn, we know you're probably going to get some yield loss. It takes a while for the soils to increase. If you put lime out this year, probably won't get to what you want until next year. For all the nutrients to work best, we need to have the right pH. So you should check your lime, and generally the leases have some kind of provision. If you lime it now and you leave 2 years later, you get some of your money back.
On the Market Journal website, you can find a link to more resources on UNL's recommendations for fertilizer and nutrient applications. With tight commodity margins and strong demand for summer pasture, Nebraska Extension range and forage specialist Jerry Volesky says some producers may find value in using an annual forage system. Jerry says that would normally include cool or warm season forages and in many cases double cropping annuals. We talked with Jerry recently to learn how this system might benefit an operation.
This past winter, it's been of interest to a lot of producers where they're taking a hard look at some of their cropland and corn, soybean prices, but then also if they have some cattle, the demand for pasture is still really strong, plus the hard to find. And so they're looking at using some of the annual forages for grazing on some of these cropland acres.
What's the big question that producers have when they start to think about this?
Well, there's several questions that they have with things like what should I plant? A lot of times they're looking at a system of different fields or acres so they can have an uninterrupted period of grazing from May through the fall. And so that requires a combination of cool and warm season annual forages that are planted. But then also the key thing for a lot of them is what is going to be the stocking rate or carrying capacity. How many pairs per acre could they graze? And once you have that information, you can easily calculate the number of acres that are going to probably be needed.
Can you explain to me more on the stocking rate, how producers can figure that out, and what it would mean for their operation?
We know for these different annual forages in terms of a hay yield, for example, how much they'll produce, and with those estimates of a hay yield or productivity of, say, oats is planted in the spring, for example, we can back calculate what the potential stocking rate could be in terms of number of head per acre. For example, like oats, we're looking at probably up to 1.5 pairs per acre. That would be the carrying capacity or stocking for a 6-week late May to early July period.
How complicated is the grazing system that you're trying to use? And you're also using a paddock system, meaning you're turning them out into one part of the field and then another, then another.
Right. The grazing management on these is a very important part of the step because we want to be really efficient in the grazing and get the most out of these planted forages. So using some type of rotation within each of the different cool or warm seasons that we might be using is very important.
If you haven't used an annual forage system before or have much experience with some of these grasses, are there anything to keep in mind with fertilization or any potential problems to the cattle that you might find?
Right, and for example, with potential problems, the nitrates or prussic acid is always a concern with a lot of these annual forages. So a person does have to watch out, at least be alert of those. Watch the amount of nitrogen fertilizer in the case of nitrates that is used, or if we have some droughty conditions, if it's on a dryland field. But usually on the irrigated field, if we do the agronomic part of things correctly, the problems can be relatively few.
You mentioned cost. What do we know about the cost to a system like this?
Well, certainly when we're looking at the costs of the seed that we would have to purchase for this, the actual field preparation and drilling of the seeds, it's important that producers do have a hard look at that, kind of estimate what it's going to take in terms of the input cost for the seeding of the annual forages, and then kind of compare that what they expect the value of the grazing that they're going to receive from it to just make sure it pencils out.
UNL's Beef website has more information about planning annual forage systems. You can also find those resources through a link on the Market Journal homepage. Now, with this week's weather forecast, here's Nebraska Extension Associate State Climatologist Al Dutcher.
Well, folks, here we go for the weekly forecast. And of course, the big news during this week was the activity earlier in the week in response to that upper air low that moved from the southern plains, merging with the big low that moved into California and brought the big flooding. Both of those merged in the center part of the country and strengthened as they moved toward the northeast. So we did drag a cold front through during the early part of the week that resulted in some thunderstorm activity, actually our first real significant thunderstorm activity of the season. That basically laid anywhere from 1/4 to about 1.25 inches of precipitation across portions of eastern Nebraska. And then we had a couple pieces of energy move on the backside of that upper air low that was situated over the western Great Lakes that brought actually some thunderstorm activity and some light snowfall activity to portions of western and central Nebraska. Now, speaking of the thunderstorm activity being our first thunderstorm activity of the year, occurred earlier this week, it's time to basically look at the new updates for the month of March and the spring put out by the Climate Prediction Center. So if we go to the upper air maps, what the thing I'll call your attention to is that the March forecast is calling for warmer than normal conditions to the west, into the northeast, and farther to our south. We're looking at below normal temperatures. The EC basically is an indication of that the statistical models can't make up a determination of whether to put it in above normal, normal, or below normal. So I like to call it your guess is as good as mine. In terms of the precipitation, it looks like above normal precipitation for the southern half of the United States. This is a result of them calculating that El Nino fueled storms will most likely have an impact on the southern plains. And of course, Nebraska sits on the northern periphery of this above normal precipitation trend. As we get into the March through May forecast, we see above normal temperatures across the northern plains, below normal depicted for Texas and basically New Mexico. And in terms of the precipitation, we see above normal precipitation from the southwest moving toward the now northeast, capturing the southwestern half of Nebraska. This is a classic El Nino pattern. The other thing I'll draw your attention to is below normal precipitation for the upper Great Lakes regions, which may indicate that we will see an early start to planting if the temperatures cooperate. Now, as far as the forecast, here's the upper air low that was responsible for our cooler than normal conditions. We get one last piece of energy moving around this. It's going to be a kind of a cool, raw day today, and then as the system rapidly moves to the northeast, we'll start to see this ridge build in. So by the time we get to tomorrow, we're looking at that ridge starting to build in, and we'll see a relaxation of the cooler than normal conditions as we start to see some nice warming. Sunday looks to be a nice day, and actually we may see a fairly nice day on Monday before this shortwave rapidly moves into our region and starts to strengthen. That will start to spread some precipitation in the central Rockies, and by the time we get into Tuesday, we'll see the first piece of energy shoot off into the Great Lakes, keeping most of the precipitation from northern Nebraska across the northern plains. And a more intense system looks like it's going to start to move across our region as we go into Tuesday night into Wednesday. So by the time we get to Wednesday, we'll start to see some of that energy digging toward the south, and we'll start to see the cold air moving into our region. All of those will combine to bring a southerly flow into our region and generate some precipitation, particularly on Wednesday, and some of that may actually carry over as we get into Thursday as the main system remains to our south. Right now they keep that system to our south and move it up into the eastern portions of the Great Lakes region, and we can see that that starts to occur by Friday with another system poised to move in next weekend. If this system moves a little bit farther north, and we are looking at a more extended period of heavier than normal precipitation. Besides that, we're looking at the 8 to 14 day forecast for next Thursday to the following Tuesday, and that shows a widespread area of above normal temperatures. And in regards to precipitation, we can see a very extensive area of precipitation, and that's more associated with that low that will probably be pushing into our region as we get into next weekend and early into the following week.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, gasoline prices, nutrient input decisions, and planning an annual forage system. As always, you can keep up with Market Journal during the week by following us on Twitter, Instagram, and Facebook. Next week, Frayne Olson will be our grain market analyst, and Aaron Berger will give an outlook for the grazing season. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.